We manage around 3.2 billion square feet of real estate globally across over 40 countries. If there's any risk to the potential future value of a real estate asset as a result of a changing climate, it's really important that they understand what those risks are. What we're seeing is a growing evidence base around the valuation of properties being linked to sustainable performance. Around 80% of our portfolio are held as investments by clients who maybe aren't yet really looking at sustainability as risk.
We know that it requires a lot of data. How do you approach this in CBRE?
I would say...
Hi everyone, and welcome to this episode of The Hubble. Today I had the pleasure of having Carl Brooks as one of our guests, who is working as Global Head of Sustainability of CBRE. Welcome, Carl. Pleasure to have you.
Great to be here. Thanks for having me.
So, could we start a little bit off by you telling us a little bit about your role and your background at CBRE?
Sure. So for those who haven't heard of CBRE, we are the largest real estate services firm in the world. And we do offer kind of like full kind of end-to-end services for the real estate sector, from our advisory business, which looks at transactions, so leasing and brokerage, and valuations, through to building operations and experience, which is the segment that I sit in. But we also have segments looking at real estate investment and project management through our Turner & Townsend division. So as I said, I sit in the BOE segment, building operations and experience, and head up sustainability for the property management business. And we work predominantly on investor client portfolios. And that could be large institutional investors, pension funds, all the way down through to private equity and high net worth individuals on their real estate portfolios. We manage around 3.2 billion square feet of real estate globally across over 40 countries, and that totals around 19,000 individual assets. So we are quite a sort of material part of the footprint of CBRE and have quite a big role to play in guiding and advising our clients on how to improve the sustainability of their investments.
Excellent. It's quite a scale that you're working with.
It is a scale, and is across all asset classes too. So from your big, shiny metropolitan office buildings all the way through to business parks, science parks, industrial, logistics, retail, residential, everything in between. So yeah, it's quite a diverse set of challenges and quite a diverse kind of set of client types to kind of work with. So yeah, it's great.
I can imagine, but that's a pleasure. And could you start by telling a little bit on the challenges working globally with sustainability on such a scale that CBRE is?
Sure. Sustainability is obviously approached differently in different regions. There are different legislative frameworks. There are different kind of political climates that we're working within, different sort of stages of maturity and different priorities in different parts of the world. Most of my career has been spent with a UK and wider European focus. And as we all know, there's been an awful lot of legislation and regulations and voluntary disclosures that have come out of the European kind of picture, which do inform the approaches in other parts of the world. But then similarly, when we think about our colleagues in Australia, they really pioneered sort of NABERS rating, which is really the kind of first rating that really sort of drove fundamental change into how buildings are designed and operated over there. So, it's really interesting to learn from different regions and to kind of see how they're approaching similar challenges, and also really interesting to kind of see what levers there are to pull, what barriers there are to adoption. And then it sort of, it kind of means that any strategy that we adopt has to be agile enough and flexible enough to sort of meet the needs of our investor clients and our teams wherever they're based in the world.
Excellent. And that's also one of the aims of this episode, to sort of see and compare the differences when it comes to working with sustainability as a financial risk in different parts of the world, essentially. But perhaps we could start a little bit on how you and CBRE work with sustainability risk as more of a financial associated risk.
Sure. Again, we're kind of going to. I'm going to answer most of these questions from the position that we all understand on this, who are listening to this podcast, that climate change is a real risk to us. We are all seeing commodity prices increasing, so there are efficiency gains to be made through looking at sort of sustainable practice, which all kind of ties into that wider picture of kind of financial risk. If we take, I guess, the biggest kind of risk I mentioned there, which is around the potential impact of climate change on real estate kind of portfolios, then real estate assets are held as financial instruments with these large investor clients. So when it comes to a pension fund, for example, they are looking for long-term stable returns that outpace inflation, which means that they can afford to sort of pay out against the sort of pension policies that their customer base has. So if there is anything that's going to potentially limit the ability of those pension funds to achieve their objectives, and if there's any risk to the potential future value of a real estate asset as a result of a changing climate or geopolitical shifts or social and demographic changes or anything, it's really important that they understand what those risks are and then have enough time to either pivot their strategy or make alternative plans to ensure they can still maintain their value appreciation over time. So this could be just around, fundamental physical risks around the location of a building. Is it near a river? Is it near the coast? Are they going to be hit by heavier, more frequent storms, hurricanes, floods, wildfires, as we've seen in parts of the world recently? All of these risks that we're seeing kind of more and more of. Then on the flip side, are they going to be exposed to transition risks? So for those of you who are familiar with that, physical risks and transition risks are the two risk profiles under the Task Force of Climate-Related Financial Disclosures. Transition risks are around changing policy, which may kind of impact the ability of kind of businesses to operate the models that they have always kind of operated. So will energy prices increase? Will there be changing regulations which tighten up rules around energy efficiency and so on and so forth? So we have to be across all of those risks to ensure that we're doing all we can to maintain and ideally add to the value of the properties that we're running. Another angle to that, going on to the sort of operations side, is that the buildings are only as valuable as the rent collection that they're actually able to make, right? So a lot of the valuation is driven by the rental income at these properties. So are these buildings going to be kind of attractive and desirable for occupiers to kind of attend? And are they going to be affordable to actually occupy as well? So with rising costs and rising prices, what are we doing to ensure that we are maximizing the efficiency of the operation of those buildings and keeping those operating costs as low as we can, so the people who are using those buildings can afford to invest in the bits that ensure their business success around the kind of productivity and the growth of their own sort of employees and their own sort of business overall.
Excellent. So you sort of, how do you translate then physical climate risks to the well-being of the occupier and keeping those operating costs as low as possible?
Yeah, well, yes. I mean, I guess there's a big correlation between the kind of physical climate risks that we're seeing and well-being. I mean, we all know about climate anxiety, and like I said, if you're living in an area that is going to be suffering from increased intensity and frequency of these events, then that's going to be quite stressful and have a huge impact on your health and well-being for sure. But I think there's also that kind of question around, are the occupiers of buildings going to be able to access their property? The areas where they live might be very sort of secure and stable and well protected, but if the access roads to their workplaces are going to be impacted, then it's going to be a challenge for them to kind of even get to work or even maintain their operation. So we do have to kind of think about those sort of kind of local geographic factors. But then when it comes to actually how occupiers are using the building, it's what are we doing to kind of correlate to the steps that we need to take to future-proof assets against some of these bigger risks with how we sort of meet the needs of occupiers now, which is around kind of increasing the productivity of the employees on site. And there's a lot we can do within building operations to ensure that the people who are using those buildings are kind of we're prioritizing health and well-being through improved air quality, for example, the improved environment around the space, improved biodiversity and biophilia in the kind of design and things, which are all sort of aspects which kind of add to the sort of health and well-being of the occupiers of the building, which has a correlation between how productive they are and how many sick days they take and how much kind of absenteeism and things that there are. So there's lots of kind of, correlations between different sort of parts of these, and obviously we like to think that some of those things are also causations. If we do this, then this will happen, as opposed to them being sort of just coincidental that they are sort of kind of companion pieces.
And in CBRE, as you mentioned initially, you do a lot of advisory work and you do a lot of work on valuation across all different asset classes. Are you seeing any differences when it comes to the financial KPIs related to these risks that we talked about?
Yeah, we are. So, I mean, we did a couple of studies, one in the US and one in Europe, which looked at the all the buildings that we kind of hold across those regions. We looked at the relative value of those properties through the kind of the rental values being commanded at those assets. And then we cross-referenced that with the prevalence of green building certifications. And by that, I mean things like BREEAM in use, for example, or LEED, and primarily in the US, and then other kind of similar certifications like that. And even when you adjust for factors like building age, location, and other sort of factors which may sort of kind of tip the scales in those properties' favour, we still saw around 4% rental premium for LEED certified buildings in the US, and a slightly higher, almost 5% rental premium increase on green certified buildings across Europe. So it's not sort of a huge difference, and some people may argue that could be just like a calculation error or something. But what we're seeing is a growing evidence base growing around the valuation of properties being linked to sustainable performance, and then also the kind of rental value and the attractiveness of buildings based on the fact they have these green certifications, because often they're kind of indicative of a higher standard of building, a higher quality building, or ideally a well-managed building, especially if it's managed by us.
Exactly. And on that note, do you see any differences in with the certain types of investors that you're working with when it comes to their risk appetites for these types of, I don't know, when you compare a building that doesn't have a certification compared to a building that has one, or what do you see there?
Yeah, I mean, we work with thousands of clients. I mean, literally thousands of clients. So, and there is a huge kind of like swing in the awareness and the engagement with the sustainability agenda across our sort of client, across our client base. We kind of estimate that around 20% of the buildings that we manage globally are held by, I guess, the sort of the more strategic investors that we work with. So those investors that will already have their own, they view sustainability as part of their fiduciary responsibility around investment management, and they often have their own kind of targets and objectives around sustainability. But what that means is that around 80% of our portfolio are held as investments by clients who maybe aren't yet really looking at sustainability as a risk. That's not necessarily because they're not interested in sustainability, but maybe they haven't quite yet understood just what the risks are around this framework. And part of what we need to do as an organization is to ensure that we are able to kind of show them where the risk sits in their portfolio, why we believe it's a risk, and then most importantly, what can be done to mitigate and manage that risk to protect the value of their investments into the future. So we have a huge opportunity to support, I guess, the leading cohort of clients who are already setting their own targets around this, but also really kind of like handhold and advise clients who maybe aren't yet looking at sustainability as a key part of their risk management framework.
And where do you find the progress to go fastest? Is it among the 20% that already are working on this, or do you aim your focus mostly on the other 80%?
It depends, I think is key. Obviously, there's a big lever we can pull straight away with clients who have their own objectives, because we can say, well, actually, the success or failure of your targets really sort of depends on the performance of your investments. And where we're managing portfolios for them, then we have a direct kind of influence over what can be done at those properties. Clearly, we still need to then sort of show them where the investment is required, and then sort of gain support for the investments to be made. Because unfortunately, we can't fund all these initiatives, so we have to recommend the best way of investing sort of capital into the properties to kind of make sure that they do stay sort of viable into the future. There is actually also a huge opportunity with what we would, I guess, say the long tail of our sort of investment portfolios are, where it's just a good opportunity for us to sort of bring a bit of light to this argument, which is, quite a lot of heat at the moment and maybe a bit less light. So we can use the data we collect and the experience that we have in working across a broad range of portfolios to really sort of show some material examples of why sustainability is important, and how we can phrase sustainable improvements in a way which may better reflect their outlook on the issue. So again, like I was saying earlier, if it's more around framing the argument in terms of, reducing operating costs or projecting long-term value or whatever it might be, we don't even need to mention carbon, climate change, and any other sort of potentially divisive topic.
I see. And do you see any difference there with geographical differences when it comes to investors in Europe and in North America, for instance? I mean, the normal association is that since Europe is longer ahead when it comes to CSRD regulations, other sustainability stuff, from a more central European-wide perspective, I think many people associate European investors to be long ahead. But what do you see? Who's working with both?
Yeah, I think as I mentioned at the top of the conversation, there's a lot more kind of regulation in Europe, which is obviously something which everyone has to adhere to a certain degree. A lot of the reporting frameworks that we kind of respond to, whether it's things like GRES, the Global Real Estate Sustainability Benchmark, as an example, they do sort of they have come from Europe initially. So Europe has been the driving force for a lot of the reporting requirements that we see. What's interesting, and working with our US clients and portfolios as well, is that a lot of the regulation that's coming in the US does take its cues from the work that's been done in Europe. I attended a conference at the start of the year in Nashville, and I was quite surprised at the number of speakers who were sort of referencing European regulation and the CSRD review and the omnibus package that was kind of announced recently, and so almost like waiting to see what Europe was going to do to inform what they would do as well. And on the one hand, that's a surprise, but on the other hand is not, because if we look at capital flows globally, a lot of the companies who have investments in the US real estate market are European investors. So they often look at the European reporting frameworks and apply those in the US context, and then their peers in those industries also then kind of follow suit. And then regulation that maybe grows up in Europe gets adopted or forms the basis of the regulation that we see being introduced in the US as well. So there's a huge number of local ordinances and laws in the US, building performance standards, which in some cases have pretty prescriptive requirements around energy efficiency and decarbonisation, which are enshrined into that kind of city or state law. So it's another good lever we can pull to support clients to adhere at least to their kind of local regulation.
So it's more local regulation, but many Americans at these conferences are inspired actually by what the European regulators are coming with.
So it seems, yeah, absolutely. Who knew?
Yeah, exactly. But one question on that topic, because how did they react when the omnibus come? I mean, the Americans, how did they? What did they think of the omnibus regulation?
Well, I mean, speaking on from kind of CBRE's perspective, because we are a big US firm that also kind of aligns its reporting to the kind of CSRD. It just means that we've had to kind of look at everything that we were reporting on under the original CSRD requirements, and then we've had to basically just realign and review our reporting processes to ensure that they kind of meet the kind of new requirements, and maybe sort of maintain some things that we just think is good. It's just good practice and good hygiene factors that maybe are no longer required by the new proposed change to that particular package. So it's more a case of the industry having to kind of, keep up to speed with the adjustments and changes, and then work out how far they want to adopt those changes into their established business practice. Because while the legislative angle is important, we do find a lot more of our clients who are aligned to the requirements of voluntary disclosures. I mentioned GRES earlier. There are other CDP in revenue in Europe too, where they have been sort of setting the pace of sustainability reporting and disclosure, and ideally the action that sits around ensuring their scores are maintained or kind of improve over time, to the point where the voluntary disclosures almost become mandatory in the sector because everyone's doing it. If you want to compete for investment, which I guess is what GRES was originally designed to do, you need to be able to demonstrate that you are a better prospect than another prospect over here, and GRES is a way of leveling that playing field.
I see. If we go back, circle a little bit back to how you actually are able to advise your customers on this and how you approach the 80% of your investors and customers. Working in Telescope, we know that it requires a lot of data and a lot of technicalities to actually showcase to a customer what's the ROI on these type of efforts. How do you approach this in CBRE?
Yeah, you're absolutely right. Data underpins absolutely everything we do, and it's going to be sort of something which continues to transform our industry and how we approach these challenges with our clients. When I joined CBRE, almost 6 years ago now, back in 2019, it was very clear to me that in order to deliver the services initially in the UK, my role was initially UK based, we would need to sort of standardize and streamline our approach to data collection. We were finding that where clients were almost trying to kind of like fill the gap in sort of data quality and availability, they were kind of entering into agreements with multiple platform providers or consultants, or using good old Excel, which is still kind of prevalent even today, which meant that our teams have to engage with multiple processes, which means it's just incredibly inefficient, and we're spending more time just getting something done than doing nothing. So when I joined, we took a view that we wanted to adopt our own approach to data collection and standardize data collection across the property management business in the UK. And then very quickly that became the strategy that we adopted across our European portfolio. And then as of 2022, my role changed to take that blueprint into our global business and adopt that same standardization to data collection across the Americas and then into APAC as well. We entered into a strategic partnership with our original vendor that we selected for the UK, a European company called Deepkey, and then our strategic partner for CBRE, primarily driven through the relationship that we have with them within property management. And that does a couple of things. It means that we have one common approach to data collection across a whole range of sustainability indicators and metrics. Energy and carbon is still, number one kind of priority for most of our clients. But it also means that once we've got that data available to us, we can start to leverage the data as a tool to provide a broader and deeper set of insights to our clients as to how their buildings are performing, where the risk sits in their portfolio, where they might need to focus their investment, and then where the opportunities to improve the performance of those buildings actually lies. So we can run kind of benchmark analyses on local benchmarks. We can overlay building data on the CRREM pathways, so the kind of carbon risk real estate monitor. So we can look at where the year of misalignment is asset by asset across different asset classes. And then we can use the system as well to, bring together all of the sustainability actions into one place and then look at what the impact of those actions is going to be on the future performance of those properties. So by having that tool internally, we can start to have a much more informed conversation with our clients and show them where the risk actually sits and where it might be best to invest their money. And that could be direct investments in initiatives and interventions at the property, or it could be the need to bring in third-party support to do a bit of a deeper dive into why the building is behaving the way it is. And then we're seeing that kind of platform, through our relationship, develop and evolve over time to become even more and more useful to us within CBRE to give better advice to our clients around how to improve the sustainability of their portfolios.
Fascinating how you use this trend of sustainability that has come in to also actually help developing the supplier industry. Actually, that's really inspiring.
Yeah, and one of the main reasons for wanting to go into the partnership was actually, if we're going to go into new markets, like in North America, for example, like in Australia, for example, they have, as we were saying earlier, they have slightly different reporting regimes. We have EPCs in Europe, they have Energy Star in the US, they have Neighbours in Australia. We have kind of regulations in Europe, but there are other regulations elsewhere. And so we want to ensure that if we're going to have a global platform, it needs to reflect the needs of the local markets wherever we're operating.
Could it make sense for a company with a scale as CBRE to develop your own type of digital solutions or invest in other PropTech vendors?
Absolutely. We have a large kind of D&T team within CBRE, and we do develop products in-house.
What type of products do you develop? Just curious.
Well, I'm probably going to do them a gross disservice by kind of missing all the kind of really key ones. But, a lot of the ones that we interact with kind of day to day are around how we are cataloging all of the properties and portfolios that we're managing, all of the leases, all of the tenancies, all of the kind of team information, so allocations to different sort of teams and so on. That's all kind of, pulled into a central database, PMDM, Property Management Data Mart, and there are sort of others kind of outside of that as well. And then there are various kind of systems that parts of the business use. So there's an overlay that's we've developed internally that brings key metrics in from sustainability, from kind of leasing, from service charge collection, from finance, other sort of functions to give a bit of a sort of property on portfolio snapshot overview of performance across a range of different key criteria. So it's that kind of thing. We're also, from a sustainability perspective at the moment, working to develop an AI overlay, which sort of brings a lot of the data that we have within CBRE and overlays it with publicly available data that's out there in the world at large, along with other sort of performance data from different parts of CBRE, to start to put sustainability even more firmly into a strategic context within our sector. So we can start to kind of model, okay, what trends are we seeing around sustainable buildings versus rental income versus value versus how many deals are falling through on technical due diligence failures or whatever that might be. So yeah, with the right kind of data, you can slice and dice and chop it up the way you want to give a much clearer picture to our investor clients as to which regions are likely to be emerging, which ones are the most well insulated from the kind of worst impacts of climate change, versus looking at trends in sort of different sort of countries and cities globally to look at where that investment risk actually sits and where the opportunities to grow and develop actually are.
And actually showcase the financial return on investments on the sustainability efforts.
Yeah.
How accurate do you find it to be when you use the AI for these purposes?
$1 million question, right? So, I think AI is definitely something which is going to transform all of our roles. It's still, I guess, relatively nascent as a technology, so it will sort of improve over time. But I think we're seeing a rapid improvement in the outputs we get from AI, and it's becoming an invaluable tool that we all engage with day to day for myriad reasons within the business. One example I can probably give around that is the way we use AI to develop sort of virtual retrofit plans for properties, where we can just take a building with pretty basic data, good data across energy, but basic information around, it's an office building, it's got 10 floors and it's in London, as an example. And it can give an indication based on how the building is consuming energy as to where, for a building of that type, savings might be available to be made. We can then train the model further by adding more building characteristic data in there. So, what's the orientation of the building? What's the percentage of glazing on the facade? What are the U values? What are the as operation? All of these sorts of things to then refine the output that it's given. And what we're finding increasingly is that the output that we can get from that automated assessment of a building is up to sort of 80% similar to what normally have gone outside to get an audit done from a consultancy, for example. So what we can do there is actually use that as an indicator of the likely performance at any given asset to pique the client's interest and start to have that initial conversation. At this stage, if the client was kind of interested in sort of pursuing those projects further, we would recommend a bit of a quality check on the AI output, and we would engage our teams and like outside of property management to look at that, make sure that everything was approximately correct from a cost perspective, from a savings perspective, before developing a capital works plan. But it just gives us that real sort of sound first step towards having a conversation when we're trying to encourage our clients to make the investments they need to protect the investment that they have.
Wow, that's super interesting. I can imagine that the amount of data that you get from working in a place like CBRE actually allows you to make a really some predictive tools based on AI. But would you say that it's also a little bit hyped up, how much AI is being used in sustainability these days?
Yeah, I mean, I think there's always a danger of that. And I think we have to be kind of cautious when we sort of look at new technologies as being, the silver bullet that's going to solve all of our challenges. AI is a tool, and people have to be trained on how to use that tool. And it's only really going to be as good as how it's used. And we have to still be critical around the outputs that we have. We can't just accept at face value that what it's telling us is correct. And there's lots of quite fun sort of studies that people have almost kind of used AI to almost kind of demonstrate why you shouldn't trust it. Which is interesting. But prop tech has been one of those areas generally where there's been a lot of kind of fads that have come and gone. I remember a few years ago, everything was about the metaverse, and every conference you went to was about the metaverse and how that's going to change the world. And I don't think I've actually heard anybody talk about the metaverse for at least 18 months now. I don't think AI will be in that category. I think this is a technology which is absolutely here to stay, and I think we'll see those models getting ever more powerful and ever more useful and valuable for their users to actually help sort of speed up and improve the efficiency in the processes that they're running.
I think the first PropTech conference I ever went to, there was this presentation about someone in the metaverse building an office project. Which everyone was supposed to go to, and the office segment was basically declared dead. But it didn't quite go in that direction, I think.
No, I know. I don't think we all want to live in a simulation.
Exactly. Are there any other hypes currently that you within sustainability or ESG that you see?
Gosh. At the moment, possibly not. I think people are probably sort of being a little bit more. It's almost like the opposite is true at the moment. I think people are almost trying to kind of downplay what they're doing in sustainability. I think over the last kind of couple of years, it's sort of become something of a controversial topic, which obviously for practitioners seems a bit kind of crazy, because ultimately it's around sustainability is as much around kind of financial security as it is around the kind of environmental and social aspects of it. So I think businesses have been just quietly getting on with the work of achieving sustainability, simplify. I mean, we say in CBRE, simplifying complexity to accelerate value creation. And we very much see sustainability as a lever that clients can pull to add value and create value for their investments. But we have to be, like I say, very careful with how we talk about it. So I think because that's the environment we operate in, we have to be very cautious to not jump on every bandwagon, and we have to be a bit critical around how to think about some of the challenges that we have, because there's a huge gulf in the views around what sustainability actually means, where the biggest impacts can be made, and then actually where the biggest impacts can be made, and that pervades our personal lives all the way through to our corporate lives as well. So I think there's definitely more sort of need for nuance and critical thought at the moment.
But it's sort of like an iteration back to more about values and beliefs, sort of.
Wow. Yeah. Well, yes. I mean, I think that's where the battle lines are being drawn, plans of values and beliefs. Obviously, that's all very kind of subjective and sort of very personal. But I think what we need to keep a hold of is, what is the actual purpose here? And the purpose is to ensure that we create value for CBRE, we create value for our clients. And the buildings that we manage from a PM perspective are still going to be attractive and well used and well leased for our clients. So there are various ways to go about that, and sustainability is just one of the threads that we can pull on.
Excellent. Carl, thank you so much for talking to me about these topics. Before we finish off, is there anything that we feel that we forgot to talk about, or anything that we should touch upon a little bit more?
Almost certainly. I would say it's a huge topic for us, and kind of a multifaceted topic. I mean, I think the work that we're doing across the business, I'm lucky to work with some fantastic, hundreds of fantastic people across CBRE, and not least within our property management team, and like for us in the sector that we're working in, we are the teams that are actually delivering against the strategies that our clients have, because ultimately a target is great, but unless you have good data, good management, and real clear view as to where the interventions can be made, the target will always be just that. We want to try and achieve that target. So, as we sort of develop our sort of services and we kind of grow our kind of business towards that ultimate aim of supporting our clients, I think we're going to find operations being sort of like much more in the spotlight with how we actually do that.
Excellent. No, but thank you so much, Carl, for taking the time. I really appreciate having you on here. And thanks for joining in on the Hubble.
No problem. Thanks for inviting me.